Hello and welcome to today's market update. We're going to talk about what happened to the market today and what's likely to happen in coming sessions. You're looking at a 5-minute chart of QQQ. QQQ opened right here, then came under profit taking early on, recovered, and then pretty much traded sideways for the rest of the day. After this big decline from last Friday, QQQ now has been consolidating, and it's quite normal for this kind of trading within a range. This implies that at some point in not too distant future, we could see QQQ move up and perhaps get back into this range again, just to test this previous high. So the way we want to find out whether or not it can get up to there is if it can get through this zone. 297, you can see there were a number of rejection at this level, so this would be the near-term resistance. And if it's able to get through this level, then we could see it move up to 303. Now this is possible because the short-term trend is bearish. Bears have been able to push QQQ down over the last couple of sessions from 303 to 290. So easy money has already been made, and they don't want to short at this level. They want QQQ to rebound, move up to this area 303, possibly even a little bit higher to 307, and then short it and bring the market down again. So that's why there's a good possibility that we could see a bounce in coming session. So if we're able to get through this level 296, then possibility of moving up to 303 is very much possible. If we look at, if we zoom out to maybe hourly chart, just to see what the structure looks like at the moment, you can see that it's been falling steadily. So it's now trying to form a base around this level to around 290. So if it's able to get through here, then 303 becomes a possibility. You can see that there has been a number of interactions at this level, right here, right here, right here. So this area is going to act as a resistance because it was a previous support zone. And then if it's able to get through here, then there's this zone right here, which is around 307. That would also provide some resistance, but above that, the key resistance would be at this level, 313, 314, because you can see it spent quite a bit of time in this range towards the end of August. Now, support on the other hand, first area would be 288. If it goes below this candle, the low of this candle, then this 288 comes into play, and below there, this area 280 would be the support below 288. So those would be the levels to look out for. But at least on a short-term basis, it's entirely possible that we could see a bounce and at least QQQ move up to this area or possibly to this 307 area. Now, if we look at the longer term picture of QQQ, you can clearly see that the trend is clearly down since reaching a high of right here. It's been slowly heading lower. It has already fallen below the two moving averages, which are about to cross and move to the downside. So it's forming something like this where they cross and start moving to the downside. What that basically means is that if there's any rebound, these two moving averages are going to act as a dynamic resistance, as they did right here, then right here. So there are a number of times you can see previously where these two moving averages acted as an area of resistance. Now, I'm not expecting anything significant move to the upside ahead of the consumer price index, which would be released next Tuesday. Now, obviously, we all want to know what's happening to inflation. So CPI next Tuesday will show the inflation for the month of August. Now, we know that many of the inflation drivers have been coming down, such as oil prices, then supply chain issues have been resolved. Commodity prices, wheat, corn, soybean, many of the precious metals prices which are used in constructions and manufacturing like copper, aluminum, silver have been coming down. So the drivers of inflation has been coming down. So obviously that should mean that we should start to see the CPI print heading lower. But until we see that, we can't assume that. So I don't think ahead of next Tuesday, investors are going to make any significant move to push prices higher. And if we look at the momentum indicators, they're also quite weak. You can see that MACD is now about to cross below the zero line. Last time when it did so, it stayed below for quite some time. And weak momentum basically means that any rebound is likely to be short-lived. If you look at RSI has also been heading lower, but it is reaching an oversold level. If you look at the previous time when RSI came to this level, there was a bounce. This area acted as a support. When RSI reached this area, price started to move higher. So it is oversold, so there is room for some consolidation. Maybe it can create a W pattern like this way. Stochastic is oversold, so there is room for a bounce, but I'm not sure that anything significant is likely to happen, at least up until the CPI report is released. So that's a long-term view of QQQ, which is bearish but oversold. If we look at SPY, we're going to look at SPY first of all in a smaller time frame. So this is 30 minutes short of SPY. As you can see, the SPY has been forming a base at this level. Last week also it tested this level. It's been pulling back, over the last few sessions. It's been pulling back and now trying to form some kind of a base. And it's entirely possible for it to maybe rebound to this area. So last week it rose to this level and then pulled back. You can see that this area also acted as a resistance here. It was a support right here. So this would be an important level, 401, 402. Above there, we see some resistance around 407, and then this zone right here, which would be around 414, 415 area. So those would be the levels to look out for on SPY. Support is going to be around 380. If it breaks below this candle, then this 380 comes into play. So those would be the levels to look out for in SPY. If we look at the longer term picture of SPY, you can see that this is the daily chart of SPY since pulling back, since reaching the 200-day moving average. It's been pulling back. It has fallen below the 20 and 50-day EMA, which are about to cross now and head to the downside. So any rebound is gonna act as a is likely to encounter resistance right here, as they did right here. In previous occasions, these two moving averages acted as resistance. Now it's now at the 61.8 retracement level. So from here to this rally, if we take the 68.8% retracement, so we are right there. So this is an important level. If this level is breached, then we're looking at some of these levels around 380 and then 370. There's not much left. So it's very important that it hold this level. Obviously, we're not expecting a massive rebound ahead of the CPI number. Like QQQ, the momentum indicators are weak. You can see that MACD is about to cross below the zero line. RSI is also quite weak, but heading in the oversold territory. Previously, when RSI reached this zone, it managed to find a base. It formed a base here, a W pattern, and then mounted some form of a rally. So we want to see a structure right here on SPY that would indicate perhaps it's making an attempt to form a bottom. Stochastic is oversold, so they are in oversold territory, but the momentum indicators are weak. So looking at dollar index quickly, we can see that the dollar continues to rise. It rose another 0.5% today, and it's not showing any sign of weakness. It continues to make higher highs. Moving averages are going up, and this might be because the yield continues to rise. So this is the 10-year bond yield, which rose almost 11 basis points today to close at 3.36 level, and right now it's now approaching the previous high right here of around 3.5%. Now the reason why it's been going up is because market is now beginning to feel like once Federal Reserve reaches a certain level, let's say 3.75 or 4%, they're likely to keep the Fed funds rate at that level for an extended period of time. And as a result, the 10-year yield has been ticking up. Previously, there was a view that perhaps the economy might hit into a recession and the Federal Reserve may have to cut interest rate in the second half of 2023. But that view is changing. As a result, you can see that the yields are picking up again and moving towards this previous high of around 3.5%. And as long as yields continues to rise, that's going to provide support to US dollar, and it's not going to be friendly to gold, which continues to remain weak, but it's attempting to form a base right here. So if it goes below this level right here, then we could see, if you look at on a slightly longer time frame, you can see that it's forming a channel, and the bottom of the channel is right around here. So if it goes to the bottom of the channel, there may still be additional weakness right here. So that's gold very quickly. If we look at VIX, what we see is you can see VIX has been consolidating and having a bit of a problem getting through this level 2750. So we've talked about this level 2750. You can see that it has touched a number of times over the last week or so and hasn't been able to close it above. If it's able to get through this 2750, then 30 becomes a possibility, 30. On the other hand, if it goes below this 24, then this trend is likely to be invalidated because you can see that it's making higher highs. The momentum indicators are showing that the path of least resistance is to the upside, but things can change. But we need to see first whether it can get through this level. If we look at Bitcoin very quickly, let's look at Bitcoin. There's something interesting going on in Bitcoin. So we'll have a look at a 4-hour chart of Bitcoin. As you can see, we've got this, you see Bitcoin had a big drop here, and then it consolidated for a while, and then it again broke to the downside right here, and then it consolidated right here, and then there's a break right now. So you can see that there is a pattern right here. There's a drop, then a period of consolidation, another drop, and then consolidation, another drop. Now the other thing to bring to your attention is that the size of the decline is roughly the same, which implies that now that it's breaking off, we could see a decline equal to this magnitude. Now definitely this is bearish. There was a possibility that perhaps it would consolidate right here and then get back above this level and get back inside this channel, but it didn't happen. It instead broke to the downside. So this is definitely not looking positive for Bitcoin. If we look at some of the other stocks, if we look at Tesla quickly, Tesla so Tesla broke below this support right here, and now it's trying to hold support right here. So there is a support around 265, which is right there, and below there is support around this level. So Tesla needs to hold this 265 level. It finished modestly higher today, so it is oversold. If we look at the indicators, MACD, RSI, stochastic, they are oversold. So it's it needs to hold this level around 265, and below there the support would be around 255. The resistance initially would be around this 280, because this area was a previous support zone. If we look at, we'll see that Apple is has fallen below. We'll have a quick look at Apple. So this is the daily chart of Apple. Apple had a support right here, which is around 155. It closed below this level today. So the next area of interest is around this level, 155. So Apple again is going to move with the overall market. The momentum indicators are weak. MACD is now heading lower. It's about to go below the zero line. RSI is also quite weak, heading lower, but oversold. So this would be the support area, 150, 151. Initial resistance is around 160. So overall, we expect Apple to trade in line with the overall market. That's all for today. Thank you very much for watching the video.